Quess Corp reported an operational performance in the September quarter. Although high finance and depreciation costs hurt the profit. To help us understand the numbers, joining us on the phone line is Mr. S. Ramakrishnan. He's the CFO of the company. Mr. Ramakrishnan, thank you so much for speaking to BloombergQuint. What's the reason for the high growth that's come in? Which were the verticals that helped you, and how much did Allsec contribute to the revenue growth this time around?
Sure. So I think, it's been a great quarter for us again, and, we continue to focus on our operational growth, and it showed up in our results. Our revenue grew year on year by about 27%. Our EBITDA numbers grew by about 44%, and our headcount numbers grew by about 27%. So we saw some pretty strong traction in terms of our numbers, and we continue to focus on also consolidating the results in the company, in terms of making sure there are a lot of consolidation happening in the form of making sure our overall entities which we have in the company get rationalized, in terms of a lot of the balance sheet related cleaning which is going on in terms of intercompany loans, in terms of various governance which is being put in on various items, and also focusing on the operating structure. As regards the growth, our growth has been continuing with the general staffing business. We call it the workforce management platform. That's continuing to grow for us, and it continues to grow every quarter. We saw some pretty strong traction in the workforce management. In the workforce management, again, we added headcount from Q2 2019 of 1,89,000 people to about 2,55,000 people as of Q2 20. So we saw pretty strong numbers there. Similarly, the year-on-year revenue growth in the workforce management division was about 38%. They did about 1,667 crores, and also 30% growth in the EBITDA numbers, which is about 90 odd crores.
So what about? So I'll come to each of the verticals individually. The other thing was that finance cost has gone up significantly. What's your view on reducing debt? How are you looking to get? What's the debt on the books right now, and what's your strategy taking that lower?
Yeah, so if you look at the debt number during the quarter, from as of June quarter, we reported about 1,390 crores. This quarter, we reported about 919 crores. There is a significant reduction in the gross debt, and we are further reducing the debt number. The debt number is likely to be about 780 to 800 crores by the end of the year, which will be very similar to the March 2019 levels. If you remember, we had told in the June quarter that our debt numbers had gone up because we did the Allsec acquisition, and for the Allsec acquisition, we had used our internal cash and hence had to, use additional borrowings for our working capital requirement in the company, and that's the reason the June debt number jumped up. But we are working very, actively in terms of reducing the debt number over a period of time. On the interest cost, again, this quarter, what has happened is there is also an Ind AS impact, which is there in the interest cost line item. And the interest cost has got close to about 8 crores of Ind AS impact sitting in it. Over and above that, the credit utilization, like I said, since our overall credit lines went up in June because of the money we utilized for Allsec. So the utilization during the quarter was high, but all the cash which was generated, plus the cash which we got back after the Allsec open offer back from Connect, it was utilized to reduce our overall debt numbers, like I said, from about 1,390 to about 920 odd crores. So that's the broad headline.
What's the update on the intercompany loans? I believe there was a bit of concerns on that front. How are you looking to, get this right?
Yeah, I think which is one of the things which I spoke in the opening comments on the corporate structure. There's a lot of work which has happened on the intercompany loans. Our intercompany loans was about 560 crores as of, last quarter. And there is a lot of work which has happened to make sure there is a conversion of about close to 104 crores already during the quarter into CCDs. To that extent, the amount got reduced. Further, we also did the repayment of one of the loans of about another 13 odd crores. And we are looking at also a couple of more conversions of Trimax of about 129 crores, and also converting our CCDs with Connect, that's about another 145 crores. So all this would bring down my intercompany loans from about 560 crores, which was reported, to more like about 95 to 100 crores. So that's the kind of target we're working on, of which, like I said, during the quarter, we've already completed the action on about 117 crores. Another 274 crores, we got the approval of the board yesterday, and we should be able to complete the action during the quarter.
You spoke about the workforce management business. What about the other verticals? Can you share outlook on the operating asset management business as well as the tech services business?
Yeah, the operating asset management, I think again, we got about a couple of businesses in there. One is in terms of our our facility management business, where we've seen some strong growth in terms of a facility management business. And having said that, the overall operating asset management, the one which is pulling it down is our industrial business, because we had some one-off in the industrial business. We had about some of the assets in our Sterlite business which we had to sell. There was about 2.7 crores we took a loss on sale of the asset. And also, we had to take a one-time provision for one of the bank guarantees we had given to ITI for a GFGNL project. So these two are one-offs. If you add back the one-offs, then the industrial business also was, kind of profitable compared to what it was last quarter. But overall, we see a strong traction again in this particular segment also, especially in our facility management business. And in this business, we also have our security services, which again, you're seeing a lot of traction. When we took over the company, we had about 11,000 to 12,000 guards, and today we have in excess of 20,000 guards in that business. So overall, we see good traction in this business, and especially our facility management doing well, and our industrial losses coming down. On the tech services, again, if you look at it, overall the numbers have been pretty good, and this is where, if you look at it, our all-set numbers also get added. But even otherwise, our global technology business, in terms of our MFX and Brain Hunter, has done quite well. With the all-set numbers also coming in, this quarter we added about 16 crores to the EBITDA line on the all-set acquisition, because this is the first quarter we consolidated the full 3 months numbers for them.